Welcome to my weekly review. Today is Saturday, May 17th, and I want to get started right away looking at a daily chart of the Nasdaq, which had a fantastic week last week. And if your positions did well, like many of ours did well at mcstockcharts.com, it helps to have the tailwinds from the index. We had 12 trades on last week, and 11 of them were successful. The other one was just a flat VRT. Is actually up from 100 to 105, but that's beside the point. My point is that when the Nasdaq is providing the tailwinds and all the action for my intents and purposes of trading growth stocks, I just watch the Nasdaq as an index. And when it has a week like last week, which was up, it says a weekly review, 1,282 points or 7.15%, with the volume 28% above the average weekly volume. I just want to say that, yeah, your growth stock should be up at least 7, 8, 10, 15% with a week like that. So if that happened to you, it's not you're a genius. It's just it helps when the index is on your side. And you have to know the market direction and you have to select the proper stocks to have success in the market. So it's market direction, stock selection, and proper entries are going to solve like 90% of your problems. So right now we're in a nice uptrend here. As you can see, the index made a low there on April. We had this what I would call capitulation type action here at the lows of April 7th. You could see this big, heavy volume coming in on the way down, and then it rallied up. Then you had some non-believers here, or just some profit taking, right? Off the lows, we're up this much. Hey, I'm going to take some profits, get the hell out of Dodge. And then what we had is a rally here and a short little 4 or 5 day digestion period, then a spike up in a 4 or 5 day digestion period. And then last week, I just showed you we're up 7%. I'm expecting a 4 or 5 day digestion period before we resume higher. But, you just take it one day at a time. Anything can happen in the stock market and usually does. I expected a sell off on Friday. The NASDAQ was up 1,200 points going into Thursday, just in the first three sessions here on Monday, Tuesday, Wednesday. Yeah, it was up 779 points, 4%. And then on Tuesday, another 1.6 gain, and then another gain of 136 points on Wednesday. So at that point, we're up 1,200 points. I figure, well, we're going to pull back some. It gave back exactly 34 points. And then on Friday, it started to wobble a little bit in the morning, but regained its strength. Here you go. Nice little sell-off in the morning. Whoop, buyers come in into the close. Now, of course, we had news after the bell on Friday, so hopefully we get a pullback. I mean, we really need a pullback here after this three-wave down pattern of 27%. Right here, this is a 27% correction. I'm not going to try to type 27% with this tool here, but this is a 27% correction. So to rally back up to the old high of 20,204, we need about a 30% rally. I think we'll get there. Why? Well, because I use precedent analysis. I know nothing's perfect, but we had this same type of scenario with, Trump and Xi and Jerome Powell. And same thing here. And this is a 24% correction in 2018 where we had the three waves down, just like we just had with the capitulation selling here at the lows. And we had the rally up, some non-believers here, some profit takers, a rally up, and then a pullback, right? You get into this little box area, then you break out of the box, pull back. And I think we'll just continue to do the same thing and make new highs. The old high was 81.33. The new high was 81.76. Like I said, this is 24% correction. The last recent correction was 27%. Same type of thing. There's the reason why I look at precedent analysis is because there's only two emotions in the market, fear and greed. The emotions are the same, but the players change. So we have new stocks and but the emotions are the same, fear and greed, buyers and sellers, and that's it. So anyway, that's my story. I'm sticking to it. For this week upcoming, I'm expecting a little bit of a pullback, which gives us good information on your leading stocks, which is all I watch is the leading stocks. Where are they finding support? The 5 EMA, the 8 EMA, the 10 EMA, the 21 is fine. And even if they pull back to the 50, there's nothing wrong with that. But I post a list at MC Stock Charts every morning of the leading stocks, and they're above their moving averages. And usually with the criteria I use, I'm usually getting between 20 and 25 stocks every morning. And those are the stocks I want to be in, and those are the stocks I am in. Okay, I'll get to that in a minute. To me, I guess that's enough of the index. I want to go to earnings because I'm a big believer in earnings driving stock price. You know, stocks go up because of their earnings. And if your earnings go down, like Starbucks has the last couple of years, their stock's going down. And if your earnings are rising, you know, quarter over quarter, year over year, your stock will eventually, you know, appreciate. Not immediately, but eventually they will. Monday reported, excuse me, I got to have a sip of coffee every now and then. Monday reported on Monday, thank goodness. When they don't report on Monday, it's not so good. But when they report on Monday, usually get better reports, better reactions. This one has a nice cup with handle pattern. This is, you know, pretty I don't know what you call it, choppy double bottom base here in Monday. But, you know, came up here and formed this little handle here, this little pull back to the moving average, and then had a nice little week last week following earnings on Monday morning. Yep, 5%. We'll take that all week. You know, the Nasdaq was up 7, as I just said, but still, after a strong earnings report of 80% earnings growth and 30% year-over-year sales growth, you know, that was a nice move. A couple other reports that I got to get to on holdings. The shoe group had been in limbo a little bit due to tariffs, and that the uncertainty in the market, which caused a downturn. Now we don't have that uncertainty, and that's why we're having this V-shaped recovery. And On Holdings is having a V-shaped recovery too. They reported 46% year-over-year sales growth. Let's take a look at the weekly here. Yeah, up 21% last week. I think we'll take that all week. So nice response. And the shoe group itself had a nice recovery from, well, first of all, Skechers got bought out and Foot Locker got bought out within the last 10 days. So that always helps, you know, when you have M&A in the group. All right. Who else reported last week? Oh, ASTS. This is a stock that I'm not really that familiar with. I know a lot of my friends like it and trade it. You know, when the market's going up and this thing's just going flat, that to me, that's kind of a red flag for this one. But, you know, if you like it, you hold it, you know, far out, good for you. But for me, that's just a pass. I do like this one, ACHR, my friend Kevin at Malibu. We talk about this one all the time. They had news last week and it came out on Wednesday, but nobody reacted till like Friday that the CEO was on Jimmy Fallon and reported that for 2028 Olympics and Paralympics, the Special Olympics, they're going to use their air taxis. So that's kind of a big deal. And you could see this one popped only 51% last week. So if you're in that one, congrats. That's a nice move, especially if you're playing, you know, just naked calls, weeklies. Those things paid bigly. All right, KRMN is another defense company out here in Huntington Beach, California. You can see the aerospace and defense top group, you know, top stock and a top group. Nice IPO base here, and then popping higher last week, 14%. You could see the earnings line now heading north, which is what I like to see. I like some fundamentals with my stocks. I'm just kind of an old school guy that way. XLS, this one is bucking the trend with the slaughter in the biotech stocks. This one reported, I believe, on Monday afternoon, but or no, and then it responded on Tuesday, Wednesday. No, I think they reported Tuesday. And then responded on Wednesday with a nice pop of 20%. Thank you very much. And then followed up. Then on Friday, just had an inside day, which is fine. And so this one looks good. Out of the biotechs, this is one that looks good, up 25.5% last week. Thank you very much. Kava reported last week. I think it was like 9% same store sales for these guys. Just an incredible number. But the thing sold off. I couldn't believe it. I get it. It's expensive stock. You know, it's got 11 point something billion market cap with, you know, I don't know, a billion in sales. So yeah, it's 10 times sales, which is, you know, pricey. Once again, with the market going up and this thing just going sideways, this thing needs to bounce pretty soon, or it's yeah, it's up 3% last week. or it's, trouble, I think. When the market's going up, you got to go up. Otherwise, ugh. Then your relative strength, you're not providing relative strength. And for me, that's just, I gravitate towards relative strength. OKLO, another one that reported last week, is another one Kevin and I were trading with calls. Yeah, this one had a nice 34% move. So that'll boost your portfolio, if you're in something like that. Still 36% off of its high, but just a nice response to a, pretty tepid report. What else? Oh, energy. That was one that reported, I think was on Monday, right? Nice gap higher. Yeah, Monday morning gapped up and 31% move. And you think, oh, it's going to, have some profit takers pull back to its moving average. Nope, it didn't. It just kept trending higher. You can see it's got that David Ryan ant, the first ant um, in the chart there. So energy looks really strong here. Maybe form a shelf there above 150. NRG, energy, NRG, very clever. With the stronger sales and earnings report. So that's what, drives the stock higher. Look at that on the weekly, double bottom base and a nice pop. Sometimes when stocks are making highs into the earnings report, I get a little cautious, but this one, is making new highs into the earnings report, and somebody knew what they were doing because the stock popped. Anyway, Cisco Systems, this is the old go-go stock from the 90s. I still have a soft spot in my heart for Cisco Systems. A nice report on Wednesday. I mean, for them, they're used to double digits, numbers here, and it got out of, excuse me, single digit, and it got a double digit sales growth of 11%, and tracked higher on Thursday. Man, back in the day, if that thing rocked 5%, the whole market would be up big time. So Cisco was a driver. Now it's just another stock, but still, getting closer to that 80 number. Nice. I guess you'd call that a double bottom base here. We're seeing a lot of double bottoms because that's kind of what the market did with the V shape. But man, that's pretty steep. Straight up from the lows here and then pull back on Friday. But still, good report. CoreWeave is one. Another one, I believe this thing has got some legs here. When you're delivering this kind of sales growth, these are pretty gaudy numbers. These are video game numbers here. 544 and 420. Thank you very much. So some people ask me, like, how do I get in this thing? And a lot of people, I was getting a lot of response on Twitter from this stock because I posted after earnings, just kind of joking with some buddies about, bust out the magnets. It's going to 100. Hell, I don't know where the hell it's going, but it's got that 64, 62 buy point. It kind of pulled back there on Thursday after the earnings report. And then Friday popped nice 22% gain, but for the week it was up, 56%. Thank you very much. Yeah, CoreWeave. It's just this is I think it's going to be take a longer time. That's all. I'm not expecting it to go to 100 immediately, but I think longer term, these guys are in the right space for a nice appreciation here. It's already a 39 billion market cap, so it's going to have to deliver some earnings, and this sales growth has to turn into earnings for it to have, a sustained uptrend. All right, Walmart reported on Thursday morning. Walmart kind of flat, just pulled back to its 50 and then popped up. Not Walmart's not a big mover. And we'll take a look at the weekly chart here, just forming this little cup with handle here. And if the market continues to rally, we got to expect to see some of these handles, right? So if we pull back here this week, as I said at the top that I think we might see some pullback, we should see handles in a lot of these leading stocks. I'm going to get to that in a minute. And the last one I just wanted to point out was John Deere that reported a horrific quarter, kind of like Tesla and Caterpillar report all the bad news, and this thing just keeps going up, right? So to me, that tells me that, kind of the bottom is in here and the worst of the expectations over. Just like stocks top when their fundamentals look the best and the reports are fantastic and they roll over at the bottom here, they look the worst. And this is looking pretty bad. And then they start to rally. So that's a big tell for me with Caterpillar and Tesla and John Deere. Terrible reports, and they're being rewarded. All right, I mentioned at MC Stock Charts we had some trades last week, and I'm just going to go through these alphabetically and how I line them up. and why I got into the trades. And this is just kind of how I trade and how I look at stocks here. This is one that I put on the list. Why? Well, it had rallied up off the lows right from 56, and it had this little, short little pullback to the 10. That's a 10 EMA here, and then made another little shelf right around that standard buy point of 79. And so to me, trading tight within a base, near a moving average, those are three, criteria that I like. It was up 7.5% last week, so not a bad trade. That's APF. The next one I have, I'm going alphabetically here, folks, is Dutch Bros. This is one that I just put in my retirement fund because I don't want to be trading it in and out because I know myself from journaling in the past that I screw up winners by trying to day trade them, swing trade. And I just think 3, 4, 5 years from now, Dutch Bros is going to be a hell of a lot higher than it is now. At some point, I will do a comparison of Dutch Bros and Starbucks and Robinhood and Charles Schwab from back in the day. I just believe that, these types of IPO bases, they're just getting started. I mentioned Robinhood, there's 2021 IPO base. I think Robinhood's going much, much higher. DoorDash is another one. I don't know if that's 2020 or 2021. Doesn't matter. This is just an IPO base. This to me, it's just the economy that DoorDash is in. Dutch Bros and Robinhood, I just think for the next few years, they're in a good position. Anyway, I digress. I did not have DoorDash on, but I do like Dutch Bros. And it's still, since I'm on Dutch Bros, I got to explain a little bit. Yeah, it's got this sloppy, choppy, double bottom base pattern. This is why to me it's just hard to trade. So I just gonna put it away and not screw it up, hopefully. This one's straight up from the bottom too, 47 to 75, has that buy point there at 72. I don't know what I had it on at MC stock charts. I have to look through my paperwork, which is look like chicken scratch here. My wife can't read it. She comes in my office and says, "What the hell is this?" But anyway, it doesn't matter. Like I said, I just put it away for long term, and that's one that I like a lot. All right, GEV. If you're going to own an energy play, I think this is the one to own. This one's got more of a symmetrical base to it here. Not quite as choppy as Dutch Bros, but still straight off the lows there at 252, like a lot of stocks, right? And this is what I'm talking about. We can afford to a pullback and use a little bit of a handle here next week. Heck, I don't care if it comes back to this rising 21. And you're seeing with all these stocks that I'm posting that the 10 EMA crossed above the 50, the 21 crossed above the 50 about the same time. And what happened when the 10 and the 21 crossed above? Well, it started this strong uptrend, right? So we pay attention to that when these moving averages start to show signs of strength and crossing over. And so that's another reason why I got into GEV last week. Obviously made this little shelf type pattern as I totally completely mess up this chart so you can't see anything. But on the weekly it was up, like the index, 7%. Still, to me, this is still in a base. This is still actionable. And like I said, I'm looking for a handle here. As you can see, these last 1, 2, 3, 4, 5, 6 weeks, it's traded higher. So let's let it pull back for a week, 4 or 5%. If you have conviction in a stock, let's say you don't own this and you want in it and you've been watching it go, 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 and you're saying, damn, I'm missing out. Well, maybe a pullback and you can get in, an entry at a 10 or an entry at a 21. Just watch and see where this thing finds support. And when it starts to bounce, then you can nibble or just, go in and plunge in whole hog, right? Just ape in, as the kids say. But that's one that I do like in the energy space. HIMS is another trade that I had last week. This is a wild stock. And one thing that scares me a little bit about this stock is that the last time it had these little David Ryan ads, it made a top at 72 and then sold off down to 23. Ouch. I don't want to take that ride. But obviously, it's a different market because January, February, March, we were getting slammed. And now on the uptrend, it's just really rocketed here from 23 to 65, pulled back to its 5 on and I really should on these leading stocks. I got to move the moving average to the 5 because a lot of these are getting support at the 5 and bouncing. And if you're waiting for the 10, they're not getting there. There's HIMS, nice bounce on Friday of 10%. The weekly gain was 24%. I know a lot of you at MC Stock Charts were in on this one. And many of you mentioned that, I trimmed a little bit of Palantir and Robinhood and Hims on Friday, and that's wise. I mean, when you're up 24% in a week, and if you look at the prior weeks, 45% after earnings and 28%, 24%, you got to take some off. Just be, humble, don't be a pig. Yeah, Hims is a strong stock. Longer term, I think it's going higher, but it does have the ability to do that. So obviously, we're in a different type of market right now. All right, Robinhood, I posted earlier. This one, once again, could this afford to, take a breather and form a little handle here? Now I've got it on the 5. Maybe it, it pulls back to the 10, or maybe it pulls back to the rising 21. But since the 5 and the 21 crossed above the 50, I mean, that's go time, right? Breaking above the downtrending line here. And I think this has been on my ready list for a couple of weeks now, but at this point, a pullback gives, some people can get off the train and then some people can get on. So a good entry point will allow you to, withstand some pullback, the fools and the jokers that are going to get shaken out here. And I am a fool and a joker. I have my hand up. I use that term affectionately, as my friend Roger Craig used to say when we were working out. He'd call his teammates Tom Rathman and Wendell Tyler fools and fools and jokers. It's an affectionate term. So if you get shaken out, weak hand or whatever, a weak hand refers to your entry, not that you're a weak person. Sometimes I say weak hands and people get offended. So if you bought Robinhood here at 40, you can withstand, a pullback to 55 or 50 or whatever. So you don't have to be a weak hand or a fool or a joker and get shaken out. And if you're, just got in, and I'm being serious now. And if you have a stop, you probably have it at the low of 55.89. So if you get stopped out at 55.89 next week or a tick below it, say 55.75, it's probably an entry point for a lot of people who aren't in it on it yet, right? So if you'll indulge me, I'm going to change that moving average so you'll have an idea of where to expect Robinhood to pull back next week. At that 10 was 56.97 on Friday. So next week it'll be a little higher. So I'm looking forward to this thing and just providing information for me of where it wants to pull back, find support. I don't know if it'll be the 5, the 10, the 21, or the 50, but I do expect to pull back after a 7% gain in the Nasdaq last week, and this thing was up 13%. So that's a pretty good week. All right. I put NVIDIA on late. I'm not going to spend any time on NVIDIA. This, is a slower mover, but it came straight up off the bottom. I put it on after it came above the 200, and it just kind of went flat last week. It'll probably get back up to that old buy point of 150 for them like a triple top. And I don't expect it to go much higher than that. But you can see NVIDIA was up 16% last week. So that's a good week. Palantir, I did mention, trimmed a little bit of that, but to me, this is still actionable here. Form this cup with handle pattern. I think it's going higher. I just trimmed to take exposure off, going into the weekend, but that doesn't mean that I don't like it. It's up 10% last week. You can see the blue dot, relative strength. Palantir is going higher over time. The next one I had are the two R's that I have in my portfolio: Roblox and Rubric. Roblox broke out of this cup with handle pattern, just trending higher. Thank you very much. The first time I got turned on to Roblox, I was in the grocery store and some kid was crying. He's wailing at his mom. I want a Roblox card. And I felt sorry for the mom. She's dragging him out of the store. She didn't want to buy him a Roblox card. I thought, man, that Roblox must be addicting to kids. Yeah, forget the Gerber, man. Give me some Roblox cards. All right. The next one is Rubric. These guys are taking shares. This is one of the 10 stocks that I posted, along with Bros and Hims about, I think they're going to have 4 quarters in 2025 of just stellar earnings and sales growth. This one has a double bottom, clearly defined double bottom base pattern. Not much of a handle there. And it's just riding the 5 higher. Oh, it closed at the lows on Friday, 10% of the daily range. Oh, well. Once again, I like this one longer term. And if you're going to have a sustained uptrend for quarters and months and years or whatever, you need earnings, and this one's earnings line's heading due north. I think they're taking market share. You could see it was up 11% last week. All right, Spotify, another one that I had on my ready list. To me, this one's still, I shouldn't say actionable because it was extended, but you can see this double bottom base here, pullback on earnings, a nice shakeout. That's where the jokers and fools are, right? They get their stop losses taken out, and then it just rips higher, right? And so I'm guilty. I'm a joker and a fool too. So don't think that I'm being condescending or anything. I get shaken out all the time. So a pullback on Tuesday here allowed people to get in, right? You get off the train and people get on the train. Wednesday, Thursday, Friday. Nice hammer candle there on Friday. So let's see what the weekly looks like. Oh man, is that 3 weeks tight? It looks like 3 weeks tight, doesn't it? The high was a 658. Yeah, and it closed at 656, not bad. Prior week, 648 and then 644. So not quite 3 weeks tight, but looking that way in spirit. All right, nice. Shoot, it was only up 1% last week. Darn you, Spotify. So that's where the entry is important. So if you got in, I forget where my entry point was. People at MC Stock Charts know because they were posting it to me. I can't find it. Geez. That tells you how freaking organized I am here. All right. I got to move on. Tesla. I like Tesla, and NVIDIA of the Mag 7s. I had them on the ready list last week above 300, above the 200 SMA. It's closed above it the prior Friday, 2 weeks ago. At you just a tick above it there. You could see 1.8% above. Put it on, then Monday, Tuesday. Wednesday, there, nice gain. Thursday, pullback. Friday. So it had a nice week. Tesla was up 17%. Closing at the highs of the weekly range there. Very nice, 96%. So still 28% off its high. Nice trade for Tesla. I don't expect it to get to new highs, but it's just, a nice trade. And you could see now the 21 is trending through the 50. So I would expect it to trade higher. Thank you very much. The last one I have is, oh, I mentioned earlier, Vertiv at 100. As it went above the 200, I put it on midweek. It rallied up to 109, then pulled back to its 5. So maybe it'll find support and bounce. Maybe it'll come back to the 100 and bounce, but that's another stock that I'm watching. All right, so all these stocks, very nice. They're showing leadership, but I want to mention that the original leaders out of the gate here of this new rally, stuff like Netflix, which is just, I don't have this on my ready list because it's extended. It's hard to buy. Strong stocks are hard to buy. Duolingo is one right out of the gate, man, just riding the 5. Carvana, another one that I like riding the 5. This one's closer to a buy point, as is CHWY. I did not put that on the ready list. I'll have a new ready list on Monday, but these are some of the stocks that, Zscaler. Yeah, just riding the 5. This is showing extreme leadership in this cybersecurity group. Uber is another one. This one, like a couple other ones that I mentioned earlier, maybe like, gosh, I forget, Robinhood and Spotify. If this thing could pull back a little bit, to its 10 maybe. This is the 5 right here. And if I just, okay, one more time, I'll do this. Okay, just for the sake of Uber pulling back on Monday. Yeah, if it comes back right here to its 10 and finds support and bounces, new highs are not out of the question. This is a weekly review. So you're looking at this consolidation on consolidation. So this is base on base pattern. A lot of consolidation there, and it looks like it's ready to move higher, up 11% last week. So yeah, we like Uber as well. Some of the other names that, I don't mention much, but are definitely showing strength is CRDO. Once again, 10 and the 21 through the 50, now through the 200. That thing's trending nicely. And if it wants to form a little shelf here, I'll take that all day long. And I would say that, pull back to that low there, 53.28 from 60. Ooh, that would be, yeah, I'm watching Credo, put it that way. A couple other ones. Way is another one that I'm watching, not showing leadership, but still one that's trading tight within the base. Really, with the Nasdaq powering higher, that thing looks a little suspect to me. CPNG, Coupang is another one. This is one of those Stanley Druckenmiller plays. Uh, Definitely showing strength here. I think they announced some hellacious buyback recently, and this is MELI just riding the five higher prices. I'm not going to switch that again because I'm tired of doing that. And then I showed you DoorDash earlier. I want to mention PIN. I had this on my ready list 2 weeks ago, and it didn't move, right? It's just trading flat, flat, flat as the index has been ripping, right? So that's kind of a danger sign, right? Like I was just mentioned with the one stock away, that thing should be kicking ass, but it's not, right? So what happened? You can see the relative strength line falling off, and this thing fell on Wednesday and Thursday quite heavily while the index was ripping. It fell 2%, 4%. No, thank you. Yeah, it shouldn't be down 5.5% when the Nasdaq is up 6%. So that's adios, muchachos. For me, all right, I just wanted to point that out. Thank you for watching at mcstockcharts.com. We never give up. I just want to point out one more thing. Stay hungry, stay foolish, stay humble, and also stay long. If you look at let's go to the QQQs and over time, if you're in your 20s, 30s, and 40s, just getting rolling, um, you can afford to buy, an index fund over time. This thing's going to serve you well. That's what I would do, a SPY, a QQQ, like I said, over time, it's going to be herky jerky, during bear markets, you can still add. This is the great thing about long-term investing is you just can continue to pile in month after month, year after year, and these things start appreciating big time. And that's the compounding that you get, and with these long-term holds. So if I was of that age, that's what I would do. That's what I did. So yeah, they're showing you nice returns here. But if you can get into what's driving the QQQs over time, something like an Apple that's providing, a lifestyle changing, innovation with their thousand songs in your pocket with the iPod and the iPhone, the iPad, their services, their app store, their earbuds, whatever they have going on. Apple's been a revolutionary type of stock. So if you can buy it into the Apple over time, it's been a great winner. Now, I'm not saying that it's going to do that now. I think for the next 20, 25 years, you got to look at something else if you're going to pile into a company. And I should make a video, but I do have some of those stocks in my portfolio that I've already previously mentioned, but that's not the point here. I'm trying to make a point. All right, Amazon, another one, the not quite as prodigious as Apple, but it has changed our lifestyle. This is lifestyle changing, right? You get on your phone, you order something, and it's at your doorstep in, 2 hours. This is pretty incredible stuff. Amazon with their web service has been a big, huge winner as well. But my point is, you do not have to invest in lifestyle changing companies. There are companies out there, just like an oil and gas company over all these years, a Cheniere Energy, this has provided, better returns than Amazon, 13,000%, so pay attention to some of these companies. This retail, a Tractor Supply company has 27,000% returns, this since, let's call it this century, right? 25 years of growth, right? But you have to keep piling in. It's done as well as Apple, so they're not lifestyle changing. Heck, you just go into the store and you buy whatever you want. But that's why you got to pay attention to some of these companies and how they're doing because they don't have to be lifestyle changing to change your life. Just common basic, you just got to pay attention. O'Reilly, an auto parts store providing 20,000% returns this century. Not bad, right? I have a chart of how much money, if you put in $10,000 at the beginning of this century, how much these would return. And if you just put 10,000 in these, I mean, you're filthy rich. I'm talking, yeah. I'll post that chart at MC Stock Charts. It was pretty incredible to see that. You're fabulously wealthy. We just hang on long term, and that's kind of what I try to do is just, not trade everything and just hold on long term to winning plays. ODFL, this is a trucking company. Hello. 43,000% return, just blowing away Apple and O'Reilly. I mean, and Amazon, nobody's even heard of these guys. Old Dominion Freight Line, who the hell are they? So, um, they've delivered strong returns. Another one is a shoe company, right? Pay attention to the shoes. I know I make fun of Crocs all the time, but Deckers, they got, it's a shoe company. What can I say? They bought Hoka for $1 million in 2013. The Hoka's doing, a couple billion in sales a year. So pay attention to that. 70,000. I think if you put in 10,000 of that, you're like 22 million or something. Ridiculous amount of money. And then the last one I have is Monster, just Hanson's Natural, a soft drink. Okay. So that's why I say when you just pay attention to stuff like a Robinhood or a Dutch Bros, those things can change your life and they have. They're not life changing, but like I mentioned on holdings earlier, those are the new companies. Just look for new innovative companies. And when I talk about the SPY and the QQQs, those things go up over time because in this country, we have, the innovation and the technology and the creative individuals who keep bringing new companies to market. And that's what keeps growing over time. And so that's what you're investing in with these indexes. But I think you can do better with just individual companies, and that's why we pay attention to that. That's my sermon for this week. I guess some people would be wise guys and call it a TED Talk, but I'm just kind of an advocate of being long stocks. If you pick the right ones over time, I mentioned DoorDash, I mentioned Robinhood, I mentioned Dutch Bros, but there are others, and I do like some of the drug stocks that, have been murdered over time. And some of the retail plays like a MELI, I think a MELI could do big. It's already done, well. But just, some of these other names you just got to pay attention to. SE is another one that I think could do well over time. And Uber is just getting rolling. So just pay attention to some of these over time. I think the Apple, the Amazon, the Google, Meta has been fine and they'll continue to grow. But if you want this turbocharged, appreciation, I think there's opportunities out there. And so we pay attention to that at mcstockcharts.com. Thank you for watching. We never give up.